Now, welcome to the look ahead video for April the 1st. Now, quick reminder why we look at these economic calendars and why we look at central bank speakers and central bank events. It's because they provide opportunities. And here's an opportunity that one of the members of the community found last week. Now, one of the reasons we follow the financial calendar is that we're looking for key high probability opportunities that come from a variety of different sources, from economic data points, central bank decisions, geopolitical events, but also central bank speakers. And when we released the cheat sheet for the 28th of March, we released it on the 27th for the day ahead. We said that if Fed Waller is speaking tonight at 10 o'clock GMT, and we mentioned that if Waller is hawkish, then watch for more US dollar strength. We also covered this live in our webinars, and we alerted people to the fact that Fed's Waller, highly respected, highly responsive central bank speaker in terms of the market reaction on his comments. And he did indicate that the Fed may need to be not as enthusiastic about cutting rates as he had previously expected. And we just saw that there was a little bit more of a hawkish line that Fed's Waller took, and that potentially there could be a higher rates for longer scenario out of the US. And we were recognizing that if he did say something like that, we would be looking for dollar strength. And one member of our community shared his trade that he took on this more hawkish comment out of Fed's Waller, and you can see the reaction. He took the dollar Swiss franc. He chose the Swiss franc because, of course, the Swiss National Bank surprised markets with an interest rate cut just the prior week, and Swiss franc weakness would make sense against the dollar Swiss franc. You can see this decent uptrend that it's been in, and you can see that he entered on that 10 o'clock candle just as Fed's Waller started to speak, and you can see dollar Swiss franc rose sort of a good 20 points just on Fed's Waller's speech. So that's why we look at the economic data calendar. That's why we follow central bank speakers, because when you can see these events, you can sometimes just pick up asymmetric, one-sided opportunities that will maybe around here just for 15-20 minutes, but it would be enough to bank some points and to take some profit out of the market. So that's why we're constantly looking at the economic calendar to look in advance of where these strong opportunities are going to be. And this is one opportunity that we flagged ahead of time, and a member of the community shared his trade with us. So as we look at this week, let's see what we've got that looks like it could be a potential high probability trading opportunity. Now, we only get a few of these per month, but when they do occur, they're well worth looking for. So on Sunday, we have daylight saving shifts across much of the world, with lots of clocks shifting back in line with British summertime and daylight saving time. So we see a shift that's going on in time zones. That always catches people out, so just to be aware that there is a time shift taking place for many of us. On the 1st of April, it is a European-wide bank holiday, but there is the ISM manufacturing PMI print coming out. Now, this does have the potential to move the markets. Remember the major narrative that's going on at the moment. Will the Fed cut rates 3 times this year? Or will it be only twice? Will it be once? Will it be a higher for longer rate path out of the US? That's the sort of questions that markets are asking at the moment. And if we see strong US data, that's going to play into the narrative that the Fed don't need to rush cutting interest rates. But if we see weak US economic data, that's going to play into the narrative that perhaps the Fed do need to cut rates to relieve stress on the US economy. So ISM data on Monday, well worth looking out for. We will be covering that. On Tuesday, we've got the Australian monetary policy meeting minutes. It'd be interesting to see that. I'm not expecting any movement from this, but just to see what the RBA were thinking when they changed their phrasing in the last rate statement. They've now opened up the potential for rate cuts. In the previous language, they were more indicating that that there's still need for potential rate hikes. And their last meeting, they softened that significantly and opened up the potential of even rate cuts. So it'll be interesting to see what they're seeing there and why they're opening that door for rate cuts, and whether there's a reaction out of the Australian dollar from those minutes. Just be aware of that. There could be a reaction out of the minutes if there's some surprise revelation in the minutes that we didn't get after the statement. We then have some CPI data out for Germany and a whole range of manufacturing and PMIs out for Europe. Not expecting much from those. You can see it's the final prints. You don't tend to get much reaction on the final prints. German CPI, not expecting much of a move there. The base case is that the ECB expected to cut interest rates in June. Any weak inflation data will make that more likely to be an earlier occurrence, but we shall see. Have said some dovish comments towards the end of last week, but the base case still remains of a June rate cut out of the Eurozone. JOLTS job data, always worth looking at. We also got ADP jobs coming on the Wednesday. That's going to be more interesting. It doesn't indicate necessarily what's happening for non-farm payrolls, but it does set the mood music. So there's a couple of decent data points coming out on Wednesday. The ISM services PMI has a significant potential for volatility. Strong data, then expect that to support dollar in the current environment. Weak data, expect that to weaken the dollar. What we'll be looking for here is an out of consensus print. So we will be giving you updates nearer the time exactly what we're looking for in terms of whether it's consensus or out of consensus. And obviously Jerome Powell speaking as well. So there's a lot of sensitivity to the Fed at the moment and exactly how many rate cuts they're projecting this year. Their last dot plot, they projected 3 rate cuts, but they also revised GDP higher, inflation higher, and they raised interest rate expectations for 2025 and beyond higher. So where they see rates moving this year is a major focus for markets. Got some CPI prints coming out on Wednesday. That could be very interesting where the flash data is for Europe. Now, we usually have the market reacting quite strongly to these CPI prints if they come in out of consensus. So again, that will be a print that we'll be looking for. And if it comes in significantly lower, then expect markets to start bringing forward rate cuts for the ECB. If it comes in higher than the markets are expecting, then that June rate cut will remain the base case. So there is potential for some Europe inflation-induced volatility on the euro. Thursday, got the Swiss CPI. Now, this will be interesting. The SNB cut interest rates in their March meeting in a surprise. And they also revised their second quarter and third quarter inflation expectations lower. They're not expecting to hit that 2% target. So if we see a high inflation print on Thursday, you expect some of that recent Swiss weakness will unwind and you see some Swiss franc strength. That's definitely one to be watching. If we see higher than expected inflation, look for Swiss franc strength. We'll get into the detail of what we're expecting for that nearer the time. Then going through, we've got some jobs data, Fed speakers. This data here is final services PMI, not expecting much moves from that. Friday is going to be an important day, particularly with the non-farm payroll data. So remember, central banks are seeing labour data through an inflationary or a deflationary lens. A strong labour market is seen as an inflationary force because employees that have their jobs are obviously able or more able to pay higher prices. So a strong labour market is seen as a broad inflationary force in the economy. So if we have another strong labour market print, and you can see that the NFP jobs have been, the US economy is still adding jobs into the US. And as long as that robust job growth remains, then that keeps the higher for longer rate narrative alive. If we see a big miss in jobs data and we see a weakening in the labour market, that's going to bring forward expectations of rate cuts and weaken the dollar. So that will be interesting. And also the CAD data is released at the same time. So, you can sometimes get a decent opportunity in the dollar CAD if you have US jobs going one way and Canadian jobs going the other. We'll be on top of that and sharing that with you. So another week ahead. It's got a few interesting ones for us to look at. We will be updating you on the cheat sheet each day with the specific deviations that we're looking for, and as well as the pairs that we're expecting to be most influenced by these releases.